China's huge debt problem. It might sound insane, but China's debt has risen dramatically in the past decade, largely the result of credit-fed, state-owned enterprises. To some, the debt mountain represents a threat to China's stability and even the world's economic health. Others argue such fears are overdone, as most of the country's debt is state-owned and therefore manageable. How did China go from being the juggernaut of global economic growth to a ticking time bomb of debt? Well, in this video, we will discuss China's huge debt problem and its consequences. Hello everyone! Welcome to Country Economies Explained, a media channel that allows you to find out the reasons behind the economic situations of countries. Make sure to like and subscribe. Also, press the bell icon to never miss an update from us. That being said, let's begin. Local governments in China are scrambling to clear up off-balance sheet debt as debt reduction has risen to the top of Beijing's political priority list. The State Council announced last month that Guizhou, one of China's poorest and most indebted provinces, would be allowed to postpone credit repayments and undergo restructuring, highlighting the government's commitment to debt management despite the slowing economy. The central government has increased its oversight of local government finance vehicles, LGFVs, which were formed to circumvent borrowing limitations for local governments and have grown in popularity since the global financial crisis in 2008. These opaque platforms are frequently used to raise cash for infrastructure expenditure that does not provide immediate returns, causing the area's economy to accumulate hidden debt. Because banks are the primary lenders to LGFVs, a large-scale default might spread across the financial industry. Since 2015, Beijing has pushed for the transition of LGFVs from public benefit organizations to more commercial enterprises, thus lowering the risk to the financial system and the likelihood of a government rescue. Beijing and local governments face a lot of obstacles in their efforts to avoid a debt catastrophe. The size of off-balance sheet borrowing and the lenders to which it is exposed have never been made public by the federal government or local governments. Local government concealed debt, including loans and bonds, is expected to reach 45 trillion yuan, $7 trillion by the end of 2020. According to Lu Ting, the chief China economist at Nomura, this is comparable to 44% of China's GDP. According to Lu's calculation, that was more than 4 times the 9.6 trillion yuan at the end of 2010, which represented roughly 23% of the GDP. What is Beijing's strategy for reducing LGFV debt? In 2018, the Ministry of Finance said that all secret debt must be returned over the next 5 to 10 years, marking the first time the federal government has set a firm deadline. In 2019, the Finance Ministry initiated a trial initiative at the municipal level to swap hidden debt for on-balance sheet debt, focused on regions with poorer economies under heavy repayment pressure. To combat the misuse of cash and theft by local government officials, it established stricter restrictions on the use of revenues from social purpose bonds, which are funneled towards infrastructure investment last year. Last May, the central government began implementing a 4-color limitation scheme based on local governments' leverage levels. Authorities designated a color to indicate significant leverage, which might result in capital market fundraising restrictions. We've seen local government party secretaries forced to visit working groups on local government debt management since last year, bringing this subject to the top of the central and local political agenda, said Davis Sun, a director at Fitch Ratings. What is the efficacy of the new debt control measures? Guangdong Province, China's industrial heartland, said earlier this month that it had cleared all of its secret debt ahead of a deadline set by the Finance Ministry. It did not, however, give any information on how it was accomplished. Analysts believe the provincial government of Guangdong may have taken advantage of the ministry's trial scheme to swap part of its secret debt for a bond quota issued by the ministry. Guangdong's administration may have also sent money to cash-strapped smaller countries to assist with debt repayment. According to a study released last month by Guangfa Securities, Guangdong has already issued 112.1 billion yuan in bonds under the Finance Ministry's debt program. According to the research agency, 27 of China's 31 provincial-level municipalities had entered the debt exchange scheme as of January 20. Beijing received 277 billion yuan, while Liaoning, Chongqing, Tianjin, and Xinjiang received 40 to 50 billion yuan each. How serious is Guizhou's debt situation? Land sales and central government transfers get used to fund the southwestern province, which has a population of more than 38 million people and is famed for producing the popular liquor Maotai. As the economy has slowed, the government has reverted to its previous strategy of infrastructure expenditure, further exacerbating the country's debt burden. Dushan County in the province acknowledged reckless borrowing between 2016 and 20, after embarking on a development frenzy that included several white elephant projects. Guizhou's debt-to-revenue ratio got forecasted by YY Rating to be 706.56% in 2020, the second highest among all provinces. According to Tianfeng Securities, the province's LGFWs have defaulted on at least 68 debt instruments since 2018, the highest among China's provinces. Guizhou's credit rating has suffered as a result of the defaults, and investors have shunned its bonds. According to Guangfa Securities, it only raised 69.4 billion yuan from bonds offered by LGFWs last year, down from 47.6 billion yuan in 2020, leaving the southwestern province with a 2.3 billion yuan debt repayment deficiency for the year. Even though it is undertaking a government-approved restructuring process, the province's high default risk remains a source of concern, which might influence fundraising in the coming months. In a report dated January 27th, Yin Rize, a chief fixed income analyst at China Merchant Securities, wrote, "Markets are likely to avoid Guizhou LGFW bonds for the time being." Is the future of LGFWs bright? Yes. However, this may not be the case for all municipal administrations. Documents have been issued in Sichuan, Zhongqing, Shaanxi, Shandong, Gansu, and Hunan to speed up the market-oriented transformation of LGFWs. According to Guangfa Securities, transforming LGFWs into financially successful enterprises necessitates a favorable regional climate, and not all local governments have lucrative companies ideal for building the platforms. Li Yang, a former vice president of the Chinese Academy of Social Sciences, who has advised Beijing on local government debt, stated that the transition of LGFWs is still underway. Other concerns, including tax collection, must get resolved before regional debt can get sustained. The majority property developer, Evergrande, has generated the most headlines, but it is not alone. The United States should hope that Beijing takes steps to mitigate the negative consequences of these mistakes. Concerns about who will default next and on whom are growing, posing a challenge for both this nation and China. Many Chinese companies' debts have been downgraded to the point of default by credit rating agencies. The number of Chinese companies that have defaulted on their payments is increasing, and many of them are likely to be part of a bigger group that is yet unknown. Revenue flows more than kept up with the debt load as long as the economy grew quickly. However, when China's economy slowed, so did revenue, making it more difficult to service loans. The real risk here isn't so much in the number of losses as it is in the impact that these failures have on people's faith in the financial system. The risk, more than anything else, was the driving force for Washington's actions during the 2008 to 2009 financial crisis. Banks were given credit by the government so that the rest of the world might have faith in them. The Federal Reserve flooded financial markets with liquidity at cheap interest rates, so that anyone having trouble with a trade or loan could easily borrow on favorable terms and pay their commitments. The goal was to save the economy by restoring confidence and trust. Beijing could follow the 13-year-old American model, but there are better alternatives. The haphazard manner in which the authorities proceeded at the time, and the seemingly arbitrary manner in which they decided which enterprises to save and which to let fail, added to the uncertainty rather than alleviating it. A better example may be drawn from how the United States handled the savings and loan crisis in the late 1980s, or Sweden's banking crisis in the 1990s, compared to the policy mashup of 2008. Each of these other approaches was far more coherent and consistent. In the wake of the S&L crisis, Washington established the Resolution Trust Corporation, RTC. It took each failing business, used its viable assets to satisfy what commitments it could, and then added the problematic paper to its book to be disposed of when the panic subsided. The Swedes had a somewhat different institutional setup, but it was fundamentally the same. With luck, none of this would be necessary, but historical patterns in China's development history indicate that the odds are stacked against the good luck scenario. Beijing can spare China a lot of financial suffering and avoid a recession if it works to rebuild trust and confidence. Though Beijing does not incline to assist anybody else. By rescuing itself, it may be able to spare this country some grief and relieve Washington of the need to intervene. So what do you think about China's debt issue? How fast can China sort out its debt problem? Do you think you are going to be affected by it? Share your thoughts in the comments box below. I hope you all enjoyed this video. If you're new here and want more videos like this one, make sure to subscribe to the channel and turn on the notification bell. That's going to wrap it up, and thank you very much for watching. In the next one, I'll see you all. Until then, peace.